Happy new month, everyone. It's August. We're getting close to the end of the month. Good morning. I'm John Mekwa. This is Business Morning on Channels Television. Well, the month has changed, but we still do what we do, which is 55 minutes of current and relevant business conversation, and it starts right here. Now, let's not waste any time and get right into it with global oil prices. It was a little changed on Tuesday, trading near a 3-month high, reached on Monday on signs of tightening global supply as producers implement output cuts and strong demand in the United States, which is the world's biggest fuel consumer. Brent crude futures for October were at $85.25 a barrel. That's down 18 cents. That's about 0.2% lower from its close. Front month Brent settled at its highest since April the 13th at U.S. West Texas Intermediate crude was at $81.64 a barrel. That's down 0.2%, about 16 cents from the previous session's settlement, which was its highest since April the 14th. Now, Chinese authorities released additional policy guidelines on Monday, though without concrete measures to boost its economy and domestic consumption after manufacturing activity fell for a 4th month in July. A private sector survey also shows that China's factory activity swung into contraction in July, with supply, demand, and export orders all deteriorating amid sluggish market conditions. Traders are looking at OPEC meeting, which is supposed to hold this Friday, as a potential catalyst for the outlook, where they expect that Saudi Arabia's voluntary supply cuts will be extended for another month into September. In the commodity space, Chicago soybeans and corn fell on Monday, pressured by expectations of cooler, wetter weather across the U.S. Midwest in August. Wheat also dropped despite worries over Black Sea supplies, although no new major Russian attacks on Ukrainian grain infrastructure were reported in recent times over the weekend. Chicago Board of Trade most active corn contract lost 17 1/4 cents to finish at $5.13 for a bushel after it reached $5.08 a bushel. It lowered since July the 18th. Soybeans pared losses to 50 3/4 cents at $13.31 for 3/4 of a bushel after reaching $13.22 for 3/4 of a bushel. That was also their lowest since July the 10th. Wheat dipped to $6.65 for 3/4 of a bushel, and cooler temperatures and increased rain forecasts are expected to bolster crop development, adding pressure to markets. We'll come back home to Nigeria. Now, the central bank has exempted microfinance and primary mortgage banks from the cash withdrawal limit policy compliance. A statement that the CBN released on its website explained that the move was to enable them continue to play their expected roles in the economy and provide specialized retail banking services to their customers. Under the updated cash withdrawal policy regime, the Apex Financial Markets Regulator directs that with effect from January 9, 2023, individuals and corporate entities can withdraw a maximum of 500,000 naira and 5 million naira accordingly against the 100,000 and 500,000 naira limit, which was previously announced on December the 6th, 2022. And still back here in Nigeria, President Bola Tinubu had a word or two to give to Nigerians yesterday at a special broadcast at 7 p.m. And one of the outstanding, at least for Business Morning, are those promises, the palliatives for small, medium enterprises. And the plan, according to him, mostly will run from July till March 2024.
To strengthen the manufacturing sector, increase its capacity to expand and create good paying jobs, we are going to spend 75 billion between July 2023 and March 2024. Our objective is to fund minimum of 75 enterprises with great potential to kickstart a sustainable economic growth, accelerated structural transformation, and improved productivity. each of these 75 manufacturing enterprises will be able to access 1 billion credit at maximum of 9% per annum, with maximum of 60 months repayment for long-term loans and 12 months for working capital.
So that's it from President Bola Tinubu, that special broadcast yesterday. And we just took this aspect. Obviously, he did talk about a whole lot more. Our major interest this morning would be the promise to businesses. And we have joining us to talk about this and a whole lot more, the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani, joins us virtually. Good morning, Mr. Rwani. Good to have you on the show this morning.
Good morning. Thank you for having me.
So let's start generally by saying, how would you assess that speech of yesterday by the president?
It's an interesting speech, and I call it the Tinubu Marshall Plan. But you know that the Marshall Plan was actually enunciated by the U.S. president when the economy was in a state of depression. But that's where I stop. In reality, I think let us analyze it in 4 different ways. One is that there was a recognition lag. That is a recognition lag that was short enough that the president realized that the people are suffering and the people are hurting, and therefore he needed to respond to that. 2 is the question of what is the magnitude of this particular intervention. And 3 is the impact, and 4, what is the outlook. So the second thing that we're going to talk about this morning is the magnitude. In all, when you put all the things together, it's about 525 billion, and the whole savings before now for the month was about 1 trillion naira. In a 200 trillion naira economy, that comes to less than 0.5% or thereabout. For you to make an impact in an economy, for major interventions, if the economy is in a recession, it's about almost 10% way to get it out. And for when there's a slowdown, you need about 5%. In other words, you need about 10 to 15 trillion to make an impact that will be felt almost immediately. The time lag between when you have fertilizers and seeds and all of these things and when you begin to see the results is going to be much longer. And so 3. 4, there's the difference between physical and institutional infrastructure. There's a lot of emphasis on physical infrastructure. Before you build it, before you plant the seeds and all of that and get the results and the people. So I think that's basically what I'm saying is that the pronouncements are good, but there's also the question of expectations. Nigerians are under pressure, and there's also a crisis of false expectations. Having said that, I also want to point out that there's fiscal federalism, so you need to use some of the money and pass it through the states so that the states, assuming that the monies are properly used at the state level, then it will have the desired impact. If the states are only avenues for leakages, then you will not have that effect.
All right, I know you broke it down there, but one of the things that I also hear you say is in reality, because we've had a lot of plans for palliatives, a lot of policy, that is supposed to help farmers, for instance, access, because I know agriculture is also one of those things that the president mentioned. How do people know these 75 enterprises, what are the qualifications? Because I mean, looking at 75 enterprises in the whole of Nigeria, I mean, that's very minute, as you've noted. But how do you even get those who really need it to be the ones to access it? What are the requirements? What are the avenues available for them to even reach this help that's supposed to be available for them?
No, the selection criteria there's nothing to be subjective to a large extent, but any intervention of any sort will be useful and be meaningful if it's material enough to alter the outcomes. But if it is so insignificant, which is what I'm pointing out, that 525 billion naira in total, and make it 1 trillion, is nothing, right? It's nothing compared to the size of the economy. So the impact will not be felt that that much in terms of materiality, and two, quickly. But let me use a minute to talk about the institutional versus physical infrastructure. I think the president was alluded to the fact that, one, I feel your pain. Two, I want to reduce, I want to bring inflation down. Three, I want to increase productivity. And he alluded to the minimum wage. But when you talk about minimum wage, right, and I know a little bit about that, when you talk about minimum wage, you have to address it in the context of productivity. At least I know 4 states that have actually increased their minimum wage before now. I think number one, Odua State, Lagos, Kaduna, and I think recently Imo State, right? So, but 40,000 naira in today's inflationary environment cannot buy you that much. Where one tomato is 200 naira. So there has to be much more impactful intervention in this system. Now, also institutional infrastructure, which cannot be seen physically, is also important. You now look at some states when you talk about education intervention. We talk about Kaduna, Lagos, Edo State, educational infrastructure. What have they done? If you look at the scores of NECO, scores of WAEC, you find that the states that have invested heavily in institutional infrastructure are getting the results. And look at some states that have actually carried out initiatives to reduce the dependence on oil. And in fact, you go back there, you see, again, I keep on talking about Edo and Lagos, right? So there have been initiatives for like things like tourism, right? Which is going to bring inflow of tourists and visitors to Nigeria. That is the kind of diaspora and invisible flows that will help support the currency. But I want to go back to the whole idea that there's a time lag between when you enunciate policies, when they get announced, when you get the impact, and when people begin to feel it. So I stand by the fact that inflation is here for some time to come before it starts to moderate. The currency, the indication of exchange rates is taking place, but there's still, you can see some divergence in the need to increase supply. And also the effective interest rates at which people save, because national savings has dropped from 30% to 28%, and that is very important. So I just wanted to put that on the table. So one, the good policies, good sound bites, good pronouncements. Like I said, the devil is in the detail. The government has to differentiate between institutional and physical infrastructure, and that is done. And then there has to be fiscal federalism, where you actually pass most of these funds through the states, and if they can be well monitored, because there's no point giving yams to go to hold for you, because if not, the states can also raid the funds and use it for other purposes other than those which they are designed for.
Yeah, Mr. Arwan, before we leave this issue, because the president was talking about, and I think the target is between July and March next year, and you've also talked about the time lag before we start seeing the impact of any policy at all. But where is the household? People are hungry now and getting really desperate. Where are they in that plan? Help us.
Well, I think the intervention comes in at different levels. First of all, the money that is stranded has a negative investment multiplier. So the fact that the money has been taken out of the pockets of people when they bought more expensive petrol, more expensive foreign exchange, now you need to recycle it very quickly in a manner that it becomes what we call investment injections, which will have a positive multiplier. You have to release more foreign exchange to the foreign exchange market. No question about it. You can't, right now, there's a lot of demand and backlog of foreign exchange. We need to allow this begin to filter, because you have to import those goods in, increase productivity, bring down inflation to some extent or to a large extent, and then begin to see the impact. But you must do something about national interest rates, so that national savings rates increase, so investment will increase. So it's a complex web of macroeconomic variables, but the simple fact is that at prices when one egg is 100 and one tomato is 200, and also the price of rice, I understand that yesterday went from 51 to 55,000 in certain markets. So sound bites are good, pronouncements are good, but the impact and people's pockets. People are crying, people are sweltering, and we need to follow up our words with deeds, and so that people can begin to feel the impact and begin to reduce the suffering.
Yeah, I hear you, Mr. Rurani. And a lot of Nigerians would also say, well, they're waiting for that impact beyond the pronouncement and a beautiful speech. But
no, it's going to come. It's going to come.
Yeah. Okay. Well, we're waiting. We hope we don't come too late. But the coup in Niger is also a challenge to the world at this time. We've had coup in other parts of Africa. It seems those countries, I think Mali and all of that, have not. They didn't have a lot of impact on the economy and relations. But now we see the price of uranium, which is a major commodity from Niger, up at this time.
Yes. Niger is the 7th largest producer of uranium in the world. Uranium is a key ingredient for making, for powering nuclear plants. During the Ukraine war, I think most European countries, fell back on nuclear power plants. Now that there are sanctions against Niger, it means that the price of uranium will increase, and therefore, with that, people will switch to other substitutes, which is oil, gas, hydro, and others. So, to a large extent, that is good for Nigeria in terms of pushing up the price of oil, but there's a geopolitical negative impact of having a neighboring country which is under military rule, and we don't want the contagion effect to affect other West African countries. Of the 8 Francophone West African countries, 4 are under military rule. And there's something common about those countries. Those countries are under a lot of pecuniary and economic pressures. And therefore, the solution are twofold. 1, fix your economy. 2, build on your security, because we don't want any of this spillover coming to us. We have a very long boundary between ourselves and Niger, and not to talk of Mali and others. So we have to keep our eyes wide open, and engage diplomatic means, and also, but more than anything else, it's always the economy. I think that's important to know that.
And incidentally, our president is the head of ECOWAS at this time, so it directly affected decisions and all.
Absolutely. Now, I think we're going to talk about a couple of things on the commodity side, and also on the fact that the Naira effect on on earnings of companies. In all, I think for the results that have come out, altogether, there's about almost 600 billion of foreign exchange losses that have been reported by companies, and most of the companies. And that is almost equivalent, the losses, foreign exchange losses, is almost equivalent to the total amount of federal government intervention announced in this broadcast. So it's important. And what does this mean? When you look at it, it means that they have translation losses and also transaction losses. Most of the people that have reported translation losses so far are the big hitters. You have MTN, Guinness, Nigerian breweries, Cadbury, and so on. But behind this cloud, there's some silver lining. After you take the translation losses, which at times do not go through the profit and loss account of these companies, go through their other comprehensive income, it also means that when things change, they begin to recover some of this thing. But when we looked at this thing, we found that one company in particular, I think First Bank, actually reported a big surge. And this will apply to most of the banks, because their foreign currency holdings actually get translated at the new rate. It was 461 before, now it's 700 or almost 800 naira. And that led to a major surge in their performance. And this is at the time when there's a lot of the stock market actually has been lagging in the last 5 sessions actually. And so we expect 2 things happening. One is that because interest rates have increased, people are rotating out of those stocks and going back to this. But what is quite interesting is that First Bank is Nigeria's pioneer bank. It started way back in 1894. Their gross earnings were up 83% to 656 billion. And their net interest income was up 55% to 237 billion. Quite an interesting development. The electronic banking fee is up 33.19%. We find that very, very interesting. But the net gains from financial instruments offset the FX loss. They made an FX loss of 98 billion naira, but they've been able to offset this. So I think they come under multiple jurisdictions, both in the UK and other parts in Ghana. So they have to report to different regulators, and that strengthens their book. We also looked at Cadbury, which was the one-off, which is about 20 billion naira in FX losses. Cadbury has been having a good run over the past few years. But it just tells you how vulnerable companies can be. And the reason why most of these companies reported these losses is because their parent companies supported them, and they had to report due to their parent company at the official exchange rate. Now that exchange rate has moved, their loans and support from their parent companies now in naira terms has become huge. The difference between those two is what you call the FX losses. But these are one-off things. After a while, right, also Nestle and others are affected. So, but it's interesting that we understand that there's no gain without pain. The pain has come up there, come up in this manufacturing and companies that are in the real sector and service sector. But the Nigerian banks, who after a while they made foreign currency loans, if those loans go bad, and I can assure you that some of them will go bad, especially in the oil and gas sector, then they will now take a major haircut. And this will happen at a time when Nigeria is going back to the international markets to actually have its debt rescheduled, which we have to do because we need new money. And that's one thing that the Marshall Plan of the president will be more impactful when we reschedule our debt and get some new money to address the fundamental issues of the Nigerian economy. But all I can say is that there will be some more pain before the gains, and then at the end of the day, there are some bright lights at the end of the dark tunnel. But this is a very dark, long tunnel.
Yeah, it is, Mr. Rwani, and we pray that we're able to hold on through the dark tunnel until we get to the light. But thank you so much, Chief Executive Officer of Financial Derivatives Company, for your time this morning.
Thank you for having me.
All right, let's take a break now. More darkness before the light. That's what the president told us yesterday. I guess that's just emphasis on that, which is the reality of Nigeria's situation at this time. Let's take a break now. When we come back, we will tell you more about some good news, and perhaps you could glean some opportunities from there. But during this break, Odua Investment Limited has a twin celebration. They will tell us about it in this report.
Board members, shareholders and representatives of the 6 owner Southwest states of Odua Investment Company Limited meet for the 41st time to receive and consider the company's financial performance in 2022. Mr. Bimbo Ashiru presides over the gathering in his first year as group chairman. In spite of decreased performance across key indicators, the company's total assets grew from 110.5 billion naira in 2021 to 114.5 billion naira in 2022. At the meeting, the board received shareholders' approval to pay out a dividend of 428 million naira.
What you are seeing now is the true position of the physical profit. And that's the reason why we could and we're able to recommend 428 million for the shareholders as against what we paid last year. We increased the dividends. So it clearly shows that the performance is higher. But see, when you do the evaluation of assets, your profits increases, and that has been sorted out. So going forward, whatever you see is the real profit of the organization.
The company says it will invest more, especially as the company concludes plans to roll out its oil and gas portfolio, as well as continue with the upgrading and expansion of its subsidiaries.
The critical thing now is what you call a field development plan, which is technical, and you also have to fund it. So those detailed work is what is going on now, to a level where we can get a field development plan, approved by the regulatory authority, and then accordingly the investment to now go to site and do all the exploration and production can come forth. And that's why we estimate 18 months for us to have first oil production coming through.
From the AGM, attention shifts to another event, which is the launch of Odua Investment Foundation. The new entity will implement the CSR objectives of the group with focus on education, health, and youth empowerment. The advisory council of the foundation includes Mrs. Olatokunbo Awolowo Dosumu as chairman, Mrs. Onikepo Akonde, and Mrs. Victoria Aduola Sampson as members. Other members are Mrs. Biodun Shobanjo, Olusegun Olugboyegun, Wole Olanikbekun, and Adiremi Makonjola. The council will serve as an independent social corporate arm and complement the efforts of its own state governments in impacting lives.
You're welcome back and still watching Business Morning here on Channels Television. Now, President Bola Tinubu has expressed the willingness of the federal government of Nigeria to support global tech giant Google Incorporated to create 1 million digital jobs. Good news catches our attention. Well, on the other hand, we also have from the private sector some collaboration with Google Play Store, where Nigeria debit card can be used on Google Play Store. Perhaps this will also add value to the Naira. Remember that the United Kingdom government has said that they're working on the modalities to accept Naira as a payment source, in the UK. That would, of course, be another good news. But looking at it closely now and in details, what does this mean, especially when you talk about 1 million digital jobs? How should that look like? How could that look like? We have joining us to discuss is the chairman of ICT Group with Lagos Chamber of Commerce and Industry, Mrs. Ronke Adegbe, joins us virtually from Lagos. Good morning, Ms. Adegbe. Thank you for your time this morning.
Morning, and thank you very much for having me.
Great. So, of course, even from the get-go, 1 million jobs would do a whole lot to the Nigerian economy. But how could this look like? I believe this is still in the pipeline, as we would say. It's not yet materialized. We haven't heard of a plan of how it's going to come and work. How could it look like 1 million digital jobs between the federal government and Google?
Yes. It's a very exciting development, and I know that a lot of Nigerians are very excited about it. But it's important that we understand the government needs to play a key role in ensuring that the local tech industry is protected. Collaborations are needed, and policies need to be put in place to ensure that the young tech enthusiasts and professionals that we have in our local markets are able to play and dictate the tune. I'd like to put into context the issue of the fact that data, is all about the digital economy. Any digitized data is part of the digital economy. And data is the most transformative economic force since the steam-powered engine. It fuels every digital activity, from search engines to credit card swipes, and to blockchain transactions. The current estimates for data activity is $115 trillion. So the questions to ask, how does Nigeria become a big player in this space? So partnering with Google, we should be asking, what is the need for Nigerian and the Nigerian youths especially, who are hungry for growth? Most of them are unemployed. And this digital training can happen online. That is why I'm sure they mentioned the figure 1 million, because it's very easy to scale businesses on digital platforms, and as well as virtual learning. But like I said, how does the Nigerian government protect the local market players? How does it empower the young people to benefit from this and, of course, transform the economy?
So when you talk
into
about
a global player.
when you talk about protection, it does have the underlining tone that there are some fears of maybe the local industry being overridden or something like that. Could you help us understand some of those fears, why you would talk about protection?
Yeah, so the government has created the NDBP, the National Data Protection Bureau, and I believe that they are working hard, around the clock to ensure that policies that will protect data locally are put in place. However, I do believe that there's a very thriving ecosystem that can be created around data in Nigeria, and that the federal government should take a look at this critically. There are lots of experts that are very keen to add value to the conversations that are needed, to ensure that the issue of data privacy, the issue of data protection, like you mentioned, puts Nigeria on the first point of contact. Thank you.
So when we also look at this relationship with Google, I guess the best solution in these days of AI and IT and ICT would be homegrown. And as you've noted, we do have the brains back here in Nigeria. So one would actually ask, if we have the brains, we have the human resources, why are we not developing homegrown solution? We have to wait for, we have some other multinational companies that have come into the country and kind of overtaking spaces where local players can actually thrive. So what's stopping us? We have the brains. If you go out there, go to schools, go online, a lot of brains there in the ICT space. What's stopping us?
I would say that government, of course, plays a key role in creating an enabling environment. And I do also believe that ICT is made up of different parts. So it's important that there's a coordinated strategy that works for all sectors. It's also important for industry groups like Lagos Chamber, for example. The ICT sectoral group is focused on data protection for the next 2 years and how Nigeria's ecosystem can be built robustly to accommodate all the new innovation that we hope to see. So from government policies to industry players, and then more importantly, the regulatory agencies, it's their voices I think that we need to hear. They need to direct the journey for us. Thank you.
Mr. Adegbe, so I'm glad you mentioned LCCI, because we cannot keep, just waiting on government. It would be nice to know how LCCI is also stepping into all of this. LCCI has the human resources. You're the chair of ICT, so I'm sure you have a lot of people, a lot of corporates, individuals who are working, in this line and who have the potential. What's LCCI doing to bridge some of these gaps and, accelerate the growth that we need?
Yes, thank you very much. Indeed, the Lagos Chamber is, especially the ICT sectoral group, is made up of different ICT industries, and we are working together to fine-tune a strategy that would work for the economy. The data centers, for example, you can see there's a boom in data centers. But like I mentioned earlier, what's important is that data value chain. And we're also focused on that to ensure that all the different industries work together to provide more opportunities and to sort of have like a concerted effort towards growth of the digital economy.
All right, Mrs. Ronke Adegbe, the chairman of ICT group in Lagos Chamber of Commerce and Industry. Thank you so much for your time. We do hope that we can get you into the studio one of these days and have a more pleasurable and enjoying conversation. The network wasn't so smooth today. We apologize to our viewers for that. We'll try and see if we can convince Ms. Adegbe to come into the studio one of these days, and then we'll have a better conversation. Thank you for your time.
Thank you very much.
All right, let's head to the markets now and see if the president's speech yesterday moved the market. Oh, it was 7 p.m. Markets were already closed.
I was wondering if you had fast-forwarded this president's speech to about 2 p.m. or 2:30 when the market
whenever the president talks, when he mentioned the unification, then the market moved. When subsidy was, everybody moved, not just the market moved. Every time he makes a pronouncement,
there's always a rally in the market.
Unfortunately, the market was red yesterday. And we still see that, as Mr. Rawani talked about, the FX factor driving a lot of market, and we also saw the subsidy moving some markets, some stocks the other way.
Around.
Exactly.
I think so. I did expect, maybe I didn't think that maybe since we had that earlier notification that the president was going to make a speech, that the market would pick up. They didn't get it. They were like, I was thinking like, they were going to close in the green ahead of their announcement, but no, they had to go.
Don't worry, we can wait
down.
Today. Now we know what the president said. We've seen the promises, or we've heard the promises. We want to see it though.
And then fantastic news about 75 manufacturing companies going to get over about 275 billion naira.
Yes.
That's a great one for the manufacturing sector, seeing that they're seeing losses in FX devaluation. And so this will pick up for them, and you'll see probably growth in the consumer goods sector. And not just losses now.
Will, you're sounding so excited ahead of yourself.
But
I guess we should also remember that let's manage our expectations.
We manage it. We'll be optimistic about that management.
Let's manage our expectations, Will. Among other things, we did talk about Dangote. Today is the 1st of August.
Yes.
And we got all excited about it.
Yes, we did get excited.
We still do not have refined petrol from Dangote yet.
Yeah, we're expecting that. And I'm sure he's listening, and he's going to probably make, good promise to Nigerians.
That's why we have to manage our expectations. Exactly.
Definitely.
Exactly. And Mr. Ronnie did remind us that there's always the gap between when the policy is pronounced, even implemented, and when we see the results.
The action plan is actually what we're waiting for to see how it's implemented.
Exactly.
Yeah, so the week did start off negative, as we said, investors expressing more bearish sentiments towards equities, because we've seen the NGX all-share index experiencing a further decline by about 1.1% yesterday to settle, losing that 65,000 level to settle at 64,337 points. Market cap, however, still at the 35 trillion naira mark. Now, as a result of this trend, we're seeing year-to-date returns now declining to about 25.53%, but still in the 25% handle. And also, we saw the market capitalization dropping by about 110 basis points. And that's a total loss yesterday was about 391.2 billion naira. Now, let's look at the activity chart. We did see that green sea of activity yesterday. It actually just reflects the sell-off, the strong sell-off, the money flow in the market yesterday. Now, the market downward performance was mainly driven by profit-taking activities observed in major stocks. Let's look at the key sectors yesterday. We saw banking, consumer goods, industrial goods down. However, insurance and oil and gas were the green. And we saw the performance. These were, most of the stocks were affected by unification of the exchange rate. A lot of companies declared losses in FX devaluation. And we have prominent stocks such as Dangote Cement, Ecobank Transnational Incorporated, Guinness, PZ Cussons, FBN Holdings, MTN Nigeria, Access Core, and others. We saw significant declines in these stocks. But however, we saw corn oil yesterday with a fantastic half-year results, Q2 results, and that's actually pushed the oil and gas index. Investors are really bullish on the oil and gas sector. Seplat also performed fantastically well over the weekend. We did see that good performance for the earnings. Now let's look at the top trades and see who topped the trades. Now see, Abbey Mortgage Bank was a penny stock, but did top trades yesterday. 112.25 million units of its shares traded yesterday. But we do have more from Onose and Sotienaulo, is an investment analyst from Main Street Capital. Give us more insights. Good morning, Onose. It's good to have you.
Morning, Will. Thanks for having me.
Let's just kick off with one of the pronouncements made by the the president yesterday, President Tinubu. Did say that the federal government is going to spend about 275 billion on the manufacturing sector, MSMEs, 75 billion between July and March 2024. And this is to strengthen that sector, increase the jobs for people. They create more jobs and, expand, pay for people in that sector as well. What do you see? How do you see this? How do you see markets reacting to this news? And what do you expect in the short term?
In the short term, I don't expect market to react as much to this news. It's simply because its effects are not as immediate as, for example, a removal of the fuel subsidy. That's immediate. I mean, maybe the president said it's fuel stations started to increase their prices, but then this there is going to be a lag, right? If he were to, release or disburse the entire funds, let's say between now and next week, then yes, we'll see the market react to it. But then there's a long, there's a long period, and there's a lag between now and when all the funds are going to be disbursed. And with what the president said, it looks like it's going to be a gradual process. Now that gives investors enough time to gradually price in these changes, into the market. So in the short term, I don't expect to see, any fantastic or significant changes, based on this news. But as we move on, gradually as the funds are being disbursed and we start to see some of the effects, then we can now see, changes in stock prices based on, this development.
Okay, so moving on, we've seen earnings coming in back to back, but the market seems to be, lagging. What's making them lose their appetite? Is quite lackluster in the market, and we've seen that red close starting off yesterday. That's not a good start to the week, is it?
No, it's not. It's not a good start, but it's expected. I mean, when I saw Cadbury and I think Unilever's results last week, I knew that, okay, I expect to see sell-offs, although I will admit I didn't expect to see as much sell-offs in the banking space, because I knew that a lot of banks were going to benefit. At least the banks that had dollar exposure or dollar assets were going to benefit from the exchange rate situation. But this is expected because unfortunately with a significant increase in the exchange rate, so significant jump in the exchange rate, a lot of companies, FMCG, especially FMCG companies, but you also have some other industrial companies and all. A lot of these companies faced a lot of issues. Those that had currently running foreign exchange transactions. So we expected this, unfortunately, and although it's a one-off thing. It's not something that I expect that will happen. For example, if you look at Dangote Cement, even though so Dangote Sugar actually, even though they logged a loss for their H1, they're still cash flow positive. Their operating expenses or their operating cash flow is still positive. So we expect that a lot of these companies will start to recover as time goes on. But for the meantime, it's bearish, and investors are reacting to this to this bearishness. That's what we see going on in the market.
Okay, let's talk about Corn Oil. Corn Oil's earnings came in yesterday. How would you rate that performance?
Corn Oil actually performed quite well. I expected oil and gas stocks in general to perform well, and Corn Oil actually met my expectations. As 6.22% net profit margin, which isn't bad. I think they were able to increase their earnings by about, was it around 11%, quarter on quarter. And of course with Corn Oil, it's mostly because of the increased fuel prices. So I expect that even other oil and gas stocks are able to post really positive results moving forward. So that's at least that's one sector that is still quite attractive right now.
Okay, so let's circle back to the banking sector. Do you see a rebound happening soon for the stocks there? And do you think investors will stop dropping the stocks like hot potatoes and they're doing now the sell-offs, the profit taking we're seeing now? When the earnings are coming in, do you think they're waiting to see, are they waiting for a clue? What are they waiting for before they, jump on this banking stock train?
I think investors are waiting for this current sell-off to kind of just die down or to capitulate, because if you look at even the NGX ASI, if you look at the trend, yes, there's bearish momentum, but it's not a bear market. We're technically still in a bull market. And so this is just I believe that this is just a short-term thing, because if you look at a lot of banks, they are still quite, well, if you look at their book value, their current share price to their book value per share, and even their price to earnings, a lot of them are still pretty undervalued, especially banks like Access Bank, even FCNB. A lot of these banks are very undervalued, and so there is this. Okay, people are selling off now because of course bearishness, market sentiment, the herd mentality thing going. Everybody's selling, so let me just quickly sell too, and we expect that to kind of pass, and I believe that investors are just waiting for that confirmation that okay, everyone has kind of gotten the cells out of their systems, and we're moving forward. Now, one thing that might help is continued increase in the foreign portfolio investments, coming into the country. If there's a sustained increase, because I know there was an increase in between April and May. If there's also an increase in between May and June and July, then we should see people getting back, especially for banking and banking stocks.
Thank you so much, Anose Asotie Enaulo, for those insights. Very enlightening, and we just hope to see how the market performs, closes at the end of the day. Thank you so much for joining us on the program.
Thanks for having me.
So the market for the unlisted was, let's look at the NASD market, was in the red yesterday, negative 0.04%.
At least it was marginal.
At least it was marginal. So starting off the week, it's not like a heavy
like
drop as the NGX. So we hope to see more, maybe more moves in this space, and also for the NGX, maybe more investors taking advantage of the deep to buy and the bargain hunting, bringing the market back.
At least we've seen investors' confidence in the market increase, so perhaps they'll take advantage of this.
They'll do that.
Thank you so much. We'll see you at 1:30. All right, now let's head to the crypto space now and see how that market is looking this morning. I know that there was a dip, I believe, maybe on Bitcoin a bit earlier, even though we still have that neutral as the sentiment. But I think some negative things did happen to the price, especially the price of Bitcoin. There is still neutral from yesterday, but let's look at the map now and see what color we have. The map for today and see what's going on with the prices. If I can have that slide, please, to know the prices of Bitcoin and how the price movements have been. Okay, seems like we're having a bit of technical issues behind there. All right, finally. So we see that from the last time I saw it to now, there's been a little bit of increase, 0.41 there for the price of Bitcoin at 29,399.93. Ethereum is still in the negative, almost 0.5%. BNB is, however, positive. We see a lot of flip-flop right there when it comes to the prices. There. I knew something was wrong. Technical guys right there. Okay, so the price of Bitcoin is down at this time. That was yesterday. We apologize for that. More than 1%, in fact, 1.62% down for Bitcoin at this morning, 28,939.57. Ethereum is also down almost 2%. BNB the same. Cardano 2.62% down, as well as XRP there. And we have Olumide Adesina now. Yesterday we tried to have this conversation, couldn't, so I do hope we could have it. The issue with the SEC and Binance, we know it's still really hot there in the United States, even back here in Nigeria, because now the government in Nigeria has said that Binance is illegal. Now, not that Binance Nigeria we talked about before, as saying Binance is illegal in Nigeria. But let's look at some of the impact or reactions so far, because this was on Friday, the reaction of investors so far. We have somebody who invests right there. Olumide Adesina joins us now from Berlin. Hi, Olumide, good morning.
Yeah, good morning. Thanks for having me.
Great. So this issue of SEC and Binance seems not to go away. It doesn't want to go away. And now we've had Nigerian government say they do not recognize, now not Binance Nigeria, but they do not recognize Binance, that it's illegal. Have we seen reactions to this since then?
Yeah, most definitely. You need to understand that the Security Exchange Commission some days ago clarified their stance on the fact that Nigerian investors should not deal with the world's most popular crypto exchange because they don't have any regulatory approval by the Nigerian financial watchdog. And you know, by the rules, any financial service provider must get approval by that. So I think what we are seeing that kind of aggressive stance in recent times because of the FX markets. You need to understand that the P2P market plays a major role in exposing a lot of Nigerians to foreign denominated assets, and one of those assets is USDT. And a lot of Nigerians use Binance. In fact, you recall some time ago, Binance is so popular that a lot of people assume it as a crypto asset. So definitely, I think it clamped down on all these P2P platforms that are providing that liquidity for Nigerians that somehow they see as depressing the naira on the longer time frame, has also made such stance more aggressive. But if you also look at the fact that around the world, the stance against these digital asset providers is not just Nigeria. We've seen in the United States also that the battle is still on. And just yesterday, you saw the US SEC really taking the boost by the arrest of the Pulse chain developer of what they assumed as internet as fraud, investment fraud, of over $1 billion. So that has really weighed on the market. Then the US dollar, had been on the downward trend since September. We lost about 10% against major currencies. So a lot of people feel that it has been in an oversold position. So that has really weighed on crypto assets. So you see that Bitcoin dropped below the 29,000 support level, and now it seems like it wants to get back, but the dollar is really rallying strongly this morning.
So, Paul, in spite of all of these warnings, I don't know, have you met people perhaps who have withdrawn from Binance because of this?
Yeah, so you see, it's a very tricky question, but you can't undermine the influence the Securities Exchange Commission Nigeria has in the investment community, because they are like the guardians, and definitely conservative investors will definitely pull back. And those entities that were a bit on the sidelines will definitely withdraw. But having said that, if you look at the P2P market, for example, liquidity on the exchange is still stable. In case when we're looking at the NG and USDT, it's still trading at around 865 to 870 to the dollar. So it tells you that setups are not like what we are seeing based on since the memo came out on Friday. We've not seen such drawdowns, but definitely it has an impact on the longer run, because you could see that in the past couple of years, a lot of crypto entities have folded up in Nigeria. In fact, you rarely see any profitable crypto startup because of the CBN stance against banks, and it's the SEC stance on Binance definitely is going to make business harder for these entities.
And there we were hoping that President Bola Tinubu's administration would be pro-crypto, since, he's pro-markets.
Yeah, we expected that, but I think what the president is really focused on right now is ensuring the naira is stable, and any entity that they see as a threat definitely will face a lot of edges, and that's what's really paying us right now.
All right, Olumide Adesina, thank you so much for your time and your views this morning.
Yeah, thank you for having me.
All right, so let's look at the top gainers. BTG gained more than 11%. Bone also, but not up to that. Cake and TWT. We see some good-looking gains here, but we know that the king of crypto is still down. The top losers are there, looking really red and terrible right there, from 20 to 12 to 11. This is what Ladi will call double-digit drop in the prices. So it's not a very good time, as Olumide has said there. The dollar is surging, and what it means is every other, it can be two kings, I believe. But we'll keep playing out the market and keep reporting it to you right here on Business Morning. And that's where we draw the curtains on the program. Thank you so much for being a part of Business Morning a second time this week. We have 3 more to go. Don't get tired. We're going to give you relevant and current business conversations, and you only get it here on Business Morning on Channels Television. Willie Bong will be back at 1:30 to give you update from the world of business. I'll see you at 10 p.m. when the market would have closed. We'll see if the market will react to President Bola Tinubu's speech from yesterday. But in between, make some money and do take care of you.